Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, exciting news. The market is finally kicking off, and we are up about it's slump, and we're up like 7% in the last day in 97K in Bitcoin. ETH is at 3.3K. All very exciting stuff. If you've been following the mainstream news, the Clarity Act, the draft is out. They're going through markups, which are going to be discussed tomorrow in the Senate. And hopefully we will have a market structure bill soon. BitGo, the custodian, has filed to raise $200 million in a US IPO, timing TBD. And CoinGecko has engaged an investment bank and intends to sell at about $500 million. But as always, we are here to talk about the tokens, so we will dive right in. Okay, so first up, I'm going to talk to you about Zcash. So last week, basically the entire team of the Electric Coin Company, which is the for-profit business supporting the development of privacy token Zcash, quit after a dispute with their nonprofit board. So the Electric Coin Company, or ECC for short, is basically kind of like the labs entity that creates kind of infrastructure like wallets and other like key pieces, bridges, exchanges for the Zcash protocol. Zcash is a privacy token. They've been around for quite some time. They recently had this huge run up in the last year as the privacy narrative really got some legs again, following a lot of folks saying that Bitcoin had become too institutionalized. It didn't have that privacy feature, and Zcash has really taken off as a result. So the details, though, on this essentially mass exodus are pretty sparse, but it does appear that the ECC wanted to monetize Zashi, which is the Zcash wallet created by ECC. Their board, on the other hand, resisted this change, which has led to this mass exodus. The ex-ECC team, though, has already started a new project. They're calling it Cash Z. And this will have a new wallet, which they claim is built from the code base of Zashi. So the dispute just illustrates this continued misalignment we're seeing between lab and nonprofit entities supporting these decentralized protocols. Lately, obviously, we've seen that with Aave. We've seen that with Uniswap, although that has lately been resolved with their unification protocol proposal passing. But it continues to kind of be something that is really hampering the space. A lot of folks are pointing to it as something that is keeping innovation, long-term growth and innovation in the market down. Anyway, Zcash, like I mentioned, it was up about 780% in the second half of 2025. It traded down 7.3% on this news for the week. Okay, next we're going to talk about Polygon. So yesterday, the layer 2 protocol Polygon announced some big changes along with a couple of acquisition announcements. So the protocol is broadly planning to become a US regulated payments platform offering what they describe as fiat on off ramps, one-click transactions across chains, and easy onboarding. So their new payments focus is going to be achieved with the acquisition of Coinme and Sequence. So Coinme offers money transmitter licenses and regulated wallet infrastructure across 48 states, and they have 50,000 plus retail locations. Sequence, meanwhile, offers highly secure one-click cross-chain transactions. And if you're not familiar, like you do need things like money transmitter licenses if you're going to essentially do stablecoin payments in various states. So acquiring them is definitely much easier. The Sequence acquisition in the meantime is very much just a technical acquisition. So the pivot from Polygon, which has really evolved from this general purpose layer 2 to more recently a DeFi chain, is pretty in line with a broader trend towards payment infrastructure. Just for context, Polygon is joining a bunch of other chains, including Stripe's Tempo, Circle's Arc, Plasma, which launched end of last year, and many others in this race to create the predominant stablecoin payment system. The market seemed to like, though, this pivot from Polygon. It is up 24% this week. All right, last up, we have Pump.fun. So the founder of Pump.fun, the leading meme coin launchpad, broke his 2-month silence this past week to announce big changes were coming to the project. So the specific changes weren't actually disclosed by the founder, but Alon, that is the Pump.fun founder, admitted that creator fees needed to be reworked in order to reward higher quality projects. In their current form, and just to give you kind of some context, so on Pump.fun, the way it works is that anybody can go on and launch a token. Now, the creator is essentially given a cut of the trading fees that Pump.fun collects from that token. So essentially, the idea is that if you have more trading volume on your token and the market cap growth does really well, you're going to get a cut of those fees, because the idea is that if you are growing your token's market cap and trading, et cetera, it means that you are doing something right for that token. However, there's a lot of ways that this has been abused, unfortunately. And there are times when essentially creators will have a successful token, but then they'll look and be like, you know what, I've made X amount in trading fees. I don't need to do anything with this project anymore. And they leave. And essentially the token holders are kind of left holding the bag, so to speak, or essentially left holding these tokens that end up becoming worthless. So it's really starting to hurt their communities. Basically what Pump wants to do is kind of change how their creator fees or creator rewards are designated in order to reward creators that are actually doing good by their community in a longer term time frame. Obviously, this is always easier said than done, and we don't have details yet. We will see what they are. Just to give you context, though, on why this is kind of important. Pump.fun launches thousands of tokens a day. They actually peaked in the number of tokens launched in January of 2025, launching around 57,000 token launches per day. Pump.fun has seen those new launches decline, though, to around 27,000 per day. So they've gone down quite a bit. They do believe that a lot of this is in response to some of these creators not kind of holding up their end of the bargain. But despite this project is super profitable. They are still generating about $390 million per year. This is using the last 30 days of data. Pump breaking its silence, it shows the importance of investor communications. It is up 25% this week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here next Wednesday at 1 p.m. Pacific to hear what's driving token prices.